Hey guys, what's up? This is Rudy from BesterInvestor. I have had a chance to dig a little deeper into the Occidental second quarter 2020 earnings review, and also had a chance to attend their conference call this morning and their webinar. So what I thought I would do is give you the sort of official version of Occidental's quarterly review as opposed to my hokey slide presentation. And we can take a look at some of the highlights of the earnings review for the last quarter. So in the first place, this is Vicky Holub's highlights reel. We can see the production, approximately 1.4 billion barrels of oil or oil equivalents per day. Approximately $1.2 billion of additional cost reductions achieved, and the divestiture program continues. You'll see a little note here that says the Greater Natural Buttes asset divested. That one generated approximately $69 million or so in cash, just recently completed. If we look at the base management and Opex efficiency review, so what's interesting to me here, I'm obviously not going to look at the entire slide, but a couple of things that are of interest to us as investors in Occidental is for second quarter 2020, the domestic Opex per barrel of oil equivalent is $4.69. And the other thing that's interesting over here is the second quarter 2020 uptime records sort of across the board in the high 90% percentile range. So Oxy has been quite busy and quite active and very efficient at mining and generating oil for revenue during the last quarterly period that they are reporting on. This is Vicky Holub's pathway to sustaining capital. Looking ahead, so the pathway to 2021, we can see over here, starting from the left side, the 2020 capital budget, the capital spend of approximately 0.7 to about $1 billion for the second half of 2020, substantial activity and cost reductions, and a 2020 base decline of 25% in terms of the capital budget. Building some momentum. Again, I'm not going into the fine print here, but this is what Vicky is saying as we are looking forward. And then sustaining capital, $2.9 billion. This is based on capital required at a price of around $40 for West Texas Intermediate. This is actually quite a refreshing new number, because previously it was about 3.9 billion. It's now down to 2.9 billion. So this particular slide makes for quite good reading. Cash flow priorities. So this, as investors, this is what we want to know. So the current focus right now, we want to maintain the production base. We want to focus on debt reduction. And then in the medium term, we want to reintroduce a sustainable dividend and look at generating some growth capital. And in the longer term, we want to repurchase some shares. That's always good news for investors. And retire the preferred equity, which is obviously partly the prefs that Warren Buffett received in exchange for the cash injection that he made for the acquisition of Anadarko. Second quarter Q2 results. By now you've probably seen this already. Adjusted earnings per share came in at negative $1.76. The analysts were expecting approximately a negative of $1.68. So depending on which way you cut it, you can either say Occidental underperformed in terms of analyst expectations, or otherwise you can say the analysts over anticipated Occidental's results for the second quarter and made a miscalculation. And either way, there's some forgiveness in place, because you could say, regardless of the actual outcome of these results, it would have been really difficult, in fact, almost impossible to predict what the effects of the slowdown during the coronavirus the impact that it would have had, plus obviously the crash in the oil price, the lower demand, etc. It was a very unpredictable quarter. For what it's worth, from my viewpoint, Oxy actually came out of the quarter quite nicely. I said in a previous video, I'm somewhat indifferent in terms of the results. I still am. There's no information that has been shared with us that makes me either excited or cautious, or indifferent is probably the best way to describe it. Third quarter guidance. So if we look at this, the only thing that sort of catches my attention here is production. So from an oil and gas point of view, the total production sort of in the range that it has been continues. And right at the bottom here, the small print at the bottom here says production costs, domestic oil and gas, $6.25 per barrel of oil equivalent. The operating costs about 4 something, and the production costs about $6 something. So in a nutshell, you can see, or at least predict, that going forward this could be very, very profitable. If in fact Occidental is positioning themselves very nicely for a turnaround for patient investors. Corporate, so a couple of things here, the usual, the tax rate, things like that. Nothing extraordinary jumps at you. The DD&A means depreciation, depletion, and amortization numbers. These are not cash expenditures. They're just sharing this with you. It is a significant number because it allows you to knock off approximately $15.75 per barrel of oil equivalent in terms of your gross margin for tax purposes. Take a look here at the debt management. So our starting point here is 2020, where we are today. There are no further debt obligations of significance due for the rest of 2020, for the rest of the 2020 period. They have generated enough cash to through the asset sales, and obviously with the introduction of the warrants, potentially to comfortably be in a position where they can manage the debts that are maturing in the sort of near term. And then it's very interesting to see the sort of decline in terms of the outstanding debt on a go-forward basis. Vicky said during the conference call today that there are no future acquisitions planned for the immediate near term. The other thing that she said that was interesting was that publicly everybody's aware of the fact that Ghana is in play, and possibly those assets will be sold. But on the other hand, the assets in Algeria is now core to Occidental's future growth, and they've decided not to do a disposition of those assets. This is the core differentiators according to Occidental. I think most of these are for regular followers of Occidental or investors in Occidental, probably somewhat predictable. Low cost operator for sure, best in class with top wells, diversified portfolio, 14 assets across 6 different countries. Carbon reduction leadership, this is critical, especially for younger generation investors who are very particularly focused on CO2 emissions. And I think for the people who don't know, you might want to Google Occidental's handling of CO2 for EOR. It's a really interesting case study that you can read, and decades of high return inventory. As I said, these are somewhat obvious, but it's a nice little snapshot to illustrate Occidental's core differentiators against its competitors. Capital. So we look at the program by asset. The interesting thing here is you see the decline from the original 2020 guidance to where it is today, the declining number. Over here where it says key program highlights, it's small print, so I'll just read it quickly. Revised 2020 capital budget demonstrates commitment to achieving cash flow neutrally. The 2020 capital budget reflects synergy capture and additional spending reduction. the 2020 capital budget represents over 50% reduction and a base decline for 2020 of 25%. They've done a good job from a management point of view in terms of managing the capital program. Some savings that they've achieved, additional cost savings. Interesting to see this here. So I've talked about this before. When you have the merger and the integration of assets between two large corporations like Anadarko and Occidental, you don't need two sales departments and two financial departments and all that kind of stuff. So if we look at the employer and contractor savings here, 1.1 billion, asset rationalization, 165 million, real estate and other, 235 million. Obviously, you don't need two offices for all the departments that I just mentioned. So there's significant synergies that you can generate when you start integrating the assets and cutting costs. And $200 million in Opex synergies, plus another 600 million in additional Opex savings. Good job. Third and fourth quarter 2020 production guidance. Obviously, we want to know what's coming up. The actual production is sort of more or less in line with what they've been producing anyway for Q3. In Q4, we expect a slight decline. What's interesting now is that the production is actually declining slightly, but the margin is increasing for a variety of different factors. Some of the dispositions allow them to extract oil at a lower cost, so creating a higher margin. Of course, we've also seen an increase in prices, which has impacted that positively for Occidental on a go-forward basis. Cash flow sensitivities. So this is an interesting slide for me, and it's the last one. I'm going to sort of wrap it up here. Annualized cash flow changes, $210 million per $1 per barrel change in oil prices. What is particularly of note here is the difference between the impact that West Texas Intermediate and Brent have, respectively, on Occidental's cash flow in terms of cash flow changes. So a $1 change in West Texas Intermediate is an annual cash flow change of about $180 million for each $1 in the change in the WTI price, whereas for Brent, it's $30 million per $1 change on an annualized basis. So you can see at a glance what the difference is when the oil price moves just a dollar for a massive driller like Occidental. And of course, with the oil price trending up, you can view this positively if you wish to do so. For me, from an investor thesis point of view, I have not seen anything that causes me too much distress in what Occidental shared with us yesterday and today when they announced their latest quarter. As always, this is Rudy for BesterInvestor. I'm going to sign off on this point, and I would welcome your comments if you have any information that you'd like to share, or if there are any questions that you want to ask, and there's something that you'd like me to research. I enjoy doing this. Thank you for watching, and I hope to, if you're an investor in Occidental, I hope that we'll be able to share in good fortune as we patiently await the company's return to massive profitability and ultimately generating a great return for their shareholders. So thanks for watching. Stay safe. Take care, everyone. Rudy for BesterInvestor signing off. Bye-bye.